Don't mind me. I'm just picking up the scraps of the remains of my portfolio. This is Tesla. This is Snowflake. CrowdStrike. All my largest positions ripped in half. All right, we got a lot to talk about today. The market was down 5%. My portfolio was down 10%. In this video, I'm just going to show you my portfolio, how much it's down, and tell you what I plan to do with my portfolio and with this market moving forward. Here we go. Here's the portfolio. If you were watching yesterday, I shared a video about how much we were up, and I said I didn't know how long it was going to last, a day, a week, a month, who knows? And I wasn't too concerned. Why am I not too concerned? I'll share with you in just a minute, but these things happen in the stock market. Historically, over time, these things happen. These drawdowns happen. It's a natural part of the stock market. The world in the stock market is not ending, even though all the doomsday profiteers out there in the headlines want to scare us and make us feel that way. We started at 41,000 today. Actually put $2,000 in today. That didn't help. Market went down. We were down about $4,000 today, which is about 10%. And I mean, here's the positions, right? We talk about them in all these videos on this channel. I was trying to build a portfolio from $10,000 to $1 million between now and 2032. Maybe I just want to keep a $10,000 portfolio over that whole time. I'm just kidding. That's still the goal. And hey, the way we're going to get there is by adding to the portfolio. That's the secret to investing, long-term investing. Part of that is adding money to your portfolio over time. That's what I think we as everyday people that work jobs and invest, that's a big part to building a portfolio, is adding money to the portfolio. That's the secret. Anyways, Amazon was down 8%, GitLab was down 12%, Snowflake down 11%, Tesla down 8%, Datadog down 7%, CrowdStrike down 10%. Everything was down, right? When this happens and the entire market was down, it tells me it's not just my specific stocks, it's the whole market, right? So, generally that's not a reason to sell out of your stocks. If you own a bunch of meme stocks that aren't real businesses, that's a different story. If you own good businesses, yeah, sure, they might be overpriced, but it's possible, but if you're somewhere within reason, it's hard to overpay. If your time horizon is long enough and you're right about the business and it's an exceptional business and you hold long enough, it's hard to pay too much for those stocks over time. It's possible. Things were crazy before 2020, 2021. You could certainly overpay for stocks then, but I don't think we're there anymore. And I added more money to my portfolio, and that's I'm trying to scrounge together as much money as possible and put it in the portfolio and keep buying right now, with the expectation that I'm going to have to hold for at least 3 years, maybe 5, maybe 10, who knows? Anyways, buying Datadog tomorrow, CrowdStrike, Snowflake, Tesla, same thing. Let's show the market. It doesn't matter. Everything was down. NASDAQ was down. S&P 500 was down. Dow was down. Russell's down. Hey, the VIX is up. Congrats to everybody that's along the VIX. All right, here's why we're not super concerned. This is where we're at. The S&P 500 is 13.5% off its high. This chart shows percentage off highs. NASDAQ's 23% down off its highs, and the Russell 2000 is down 32%. Okay, up here we have the S&P 500. This shows us how often these types of drops happen over time and just how normal they are. You can see we're down 13.5%. This line right here is a 20% drop. Look at how many times since 1950 the S&P 500 has dropped 20%. 1, 2, 3, 4, 5, 6, 7, 8, 9. We'll count that one. 10, 11, 12, 13. And if we get that to down 20, it'll be 14 times since 1950. What about down 40%? It's happened 1, 2, 3 times since 1950. It happens. Those things happen. Could we go down 40%? It's possible. I don't think we're going to go down that far, and I'll share why in a minute. But honestly, I don't know. Nobody knows. Okay, now we're looking at the NASDAQ. The NASDAQ's currently down 20%, 22%. So let's see how many times it's gone down 30. It's gone down 30%. 1, 2, call COVID a 30% drop. It was close enough. 3 times. We could go down 30%. Who knows? That's 3 times since 1994. The Russell 2000 has been trading since around year 2000, at least on Y charts. That's their data. This marker right here is down 25%. We're currently down 33. So how many times has the Russell been down 25% from its highs? 1, came back up a little bit, then went down. We'll call that 2. That was in 2000, 2002. Never really came up. We won't count these. 3, 4, 5, 6, 7, 8, 9, 10, and now 11. So 11 times in 20 years. Once every 2 years, the Russell 2000 goes down 25% or more. And so what I hope I just showed you is that these things happen. Now the question is our valuation so out of hand, and is the situation so bad that we're likely to have a much larger 30% drop, 40% drop? Those things do happen. They are possible. This was as of yesterday, so this shows S&P 500 at 4,300. The S&P 500 right now is at about 4,100 because it was down 150 points. So remember that 4,100. And this blue line is the normalized price to sales ratio that the S&P 500 has traded at since 2001 of 18. And so that's the average that it's traded at. And so for us to get down to around 18, we'd be at around 3,600, 3,700. And so going from 41 to, we'll call it 3,600 would be, or 3,700 would be another about 10% drop from here. And so that would stink, and growth stocks would probably sell off more, but it's not that bad from here. Could we go down way more? Has it happened? Yes. The S&P 500 has gone down and traded at a PE of 15 or less. But if we're thinking it stays somewhere around, if earnings stay the same and it stays around 18, then, over the next few years, we're looking at basically a flat market. That's why I personally don't own the S&P 500. I would rather own individual stocks because I do think the S&P 500 is a little bit overpriced. But the question is are we in some kind of crazy, insane market environment? I think the S&P 500 is a little bit overpriced. We could see another 10% down. Who knows? Those things happen. But I don't think we're going to have a complete market meltdown. I could be 100% wrong. That's just what I think. That's what I'm doing. I don't know what's going to happen. I don't know how far we're going to go down. But I know that these things are normal. These things happen. And sometimes perspective is important. And we just have to accept that this is part of investing if we're long-term investors, and focus on things in our lives outside of just obsessing with the market. Try to continue to save, continue to contribute to our accounts over time, build them over time, and not make emotional, irrational decisions out of fear, and not let the price or emotion drive our decisions, but have a strategy that we can deal with that works and stick to it. And I've accepted that I'm a long-term investor. I'm going to take these lumps. I'm going to try to own great companies and hold them. And I think that'll work out over time. So take care of your mind, your body, and your money. Let me know in the comments how you're feeling, if you're feeling this pain too, and how you deal with these situations. Thanks for watching. Have a good one.